Welcome back to the Trading Desk. Later in the show, we've got Tim Dewey of the University of Oregon talking about his time working for the Fed. And it's pretty interesting thinking about the Fed and what they've been talking about, and we'll get into Tim's interview later. But we're in a strange place in the market where rates are still very low. The market has gone up again quite heavily over the last year, obviously, about 80%. And let's talk a little bit about that, because where are we today and where are we going, I think, is an important contextual discussion that investors and traders and retail or institutional always should be having with themselves internally. Yeah. So we are up 85, 90% from March of '09. Yeah, in 1 year. When everybody was puking and bailing, this is always what check yourself. Where were you a year ago? Were you buying when there was so much pain in the streets?
I personally wasn't. I was, I think, part of the public where I thought.
And you're a trader, and you're in the market every day.
Yeah, and I'm a trader.
I guess the point is here is it's difficult to buy when there is pain in the streets, and there wasn't any clear buy signals, and we were going down, down, down. But where are we today, Sean? And we've gone up 80%. Do you think you would be wholeheartedly buying if you missed that 80% move?
Well, I wouldn't necessarily be buying at these levels right now. We're coming into some resistance, and the trend is the short-term trend, short-term and intermediate trend is still up. Right. But if you look, like we said, we looked at the some of the charts going back 3 years. We're still in a secular bear market.
So let's talk about that a little bit. On a daily basis, if you look at the past year, the trend is very clearly up, right? But if you take it back just a couple moments before that, which is 3 years, which isn't that long of a time period, as you suggested, we are very bearish still. We're still not even 50, 61% of the retracement hasn't been made. So as an investor, it's very difficult, as you suggested, to buy and hold after you've missed so much of the 80% move. Yet we still are 50% below, you could argue, the high of 2007. So maybe it is a good time to buy. This is where it becomes very difficult. So how do you go about your day, and how do you go about looking at different stocks and different trades within that context? How do you break it down?
I think right now the market feels like it's very it's being rotated in the different sectors. A couple days you might get the financial stocks rallying, and the commodity stocks might be taking a break, and then vice versa. The next week you might get commodity stocks rallying, financials taking a breather. Right now, you really have to. I feel like you have to identify where the smart money, where's the big money flowing into the market. But you also have to look at the different time frames. I like to look at the daily time frame as well as shorter time frames, such as a 30 or 15-minute time frame.
So if you're seeing something that on a daily chart is bullish, and something maybe on a 60-minute that is contradicting, maybe you don't take the trade.
Yeah, maybe you just sit back and
wait for a better opportunity.
Yeah, let the market kind of show its hand before you decide to put your money at risk.
Yeah, and what's the most important thing that you look at when you look to take a trade? Is it time frame? Is it risk first versus reward? What types of things are you looking at when you set up a trade?
I think risk is definitely a big part of it. I want to understand how much I'm risking versus potential reward, potential profit target. Because if you're looking to risk $5 to make $1, that doesn't seem like a very good trade to make in my book.
So do you like to see them 1-to-1 or a bigger skew to the reward factor versus risk?
I usually look for a 2-to-1, a 3-to-1 is even better. 3-to-1.
So if you're looking to make $1, you're only going to risk 30 cents, and something in a situation like that is the way that you like to establish some type of parameters around that.
Yeah, exactly.
And then when you look, one thing that you talked about on the risk side, when we're in a market like this, it's just kind of, as you said, the peas are kind of rolling around the plate, so to speak. One sector's hot one day, there's not a lot of follow through the next day. So as a trader, you're educated and trained and conditioned to look at markets that way. But as a retail investor, I think one of the things that people struggle with is, now after we've missed this 80% move, how do I step into that position as more of a, hey, we're just the peas are gonna be rolling around, and I want to benefit from the shift of the plate. So when we come back to the trading desk, we're going to talk a little bit more about how the retail investor can become more of an agile trader in the marketplace. You're watching the Trading Desk on COTV Channel 11.